Yeah, I'm still optimistic that will buy drugs. I love the way you put 2 years into the future there. Yeah, sales are going to slow down. I think everyone agrees with the loss of Express Scripts. Every report I've read says that sales will be dropping, so, or at least leveling off. And actually, when you dig into the numbers at Walgreens and you look at the impact that Express Scripts has not only on the top line but on the bottom line as well, I was initially quite worried last year that the revenues were going to be quite devastated, but apparently not. I mean, this is good news. And Walgreens might languish for another 2 or 3 years as they slowly recover from the loss of their partner. So there could be even better buying opportunities in the future. And if you pointed out, Mark, that I was in Europe at the headquarters all of this week and just got back last night, so I didn't get as much time to dig in and prepare slides as have done in the past. But at least the good thing here is that nothing much has changed from when I looked at Walgreens before, which was in December. At least we now have more published numbers to dictate that what happened in the last calendar year was not as bad as many would have predicted.
Yeah, your slides are here if you want to walk them through.
Yeah, we can go. That'd be great. So it's the leading drugstore chain in the U.S. It has 8,000 outlets. It's actually been growing at a reasonable clip. I think last year it added over 250 stores, which actually is a slowdown from what it's done in the past. But the company actually has taken a position of focusing on the strategy within a store, and we talked about that in December, how they were guzzying them up and making them look pretty, etc., versus just willy-nilly expansion. It's a big company. I mean, it holds about, I think, 20% of prescriptions in the U.S., almost $1 billion a year. There is growth there, obviously, but when you're holding 20% of anything, growth is going to be harder to get, and you're going to have to rip it away from your competitors. But of course, the baby boomers will help. That's the bolus of people who are moving well into retirement age at this point, and into the point where they will be going to Walgreens pretty frequently to fill prescriptions. And to complement what they've been doing, and that is to talk about their strategy, they've been moving into the grocery space as well, as have many other people like Sam's and Walmart, etc., Target even. And I was reading in one of the reports that the stores that do have groceries in them are generating revenues of about 14 million per year, which is a pretty heady number. I want to dig in and look at it per 100 square feet or whatever the metric now is for grocery stores to see how they compare with the Save-Ons of the world or the Albertsons, etc. But it seemed like an impressive number to me. And I was in a Walgreens recently, and I think based on the prices, they're making quite nice profits on what they're doing. We are very close, just the second bullet point, to the 52-week low. I mean, it has gone from 30 up to about 47 and change in the last 52 weeks. We're now close to 32 or 33, so we're near the bottom. But as I said, the last report the company had indicated to me that the financials weren't as bad as I thought they were going to be. They're not really getting hit as badly by Express Scripts as I had kind of secretly feared, even though they're in line with what the company projected, the high end at least anyway. So it has been managed well. I did not update that bullet point. I said 199, but when I checked, it was now up to 150. So I still think this company has a very good future, and I think it's undervalued, and I'm gratified to see that more and more of the people who get paid to say the things that we say here are beginning to say that Walgreens is a buy. So let's move on to the next slide, which should just show the what I've put into the SSG. I had a sales growth level of 11%, and I'm going to stick with that, a bit higher than what most people would go for. I'm leaving expenses exactly where they were when I did the SSG before, back in December. But the growth rate is now a little bit higher than it was in December, at least the implied growth rate based on the SSG, the implied growth rate of the bottom line. And analysts now estimate that the earnings per share in 5 years from now will be 4.66 versus 4.08. So they've been pushing the numbers up as well, based upon what's happening recently. And there is the SSG without the forecast from analysts.
Oh, did we lose you, Hugh?
No, I'm here.
Okay.
It's the SSG without the analysts' embedded estimates, and it's pretty. I would say it's not beautiful. There's a few dents there in the Great Recession, but everyone got whacked during that time. But it's slowly on the path to recovery, dented a little bit by what's happening with Express Scripts. It has its own pharmaceutical benefit manager, WHP Health Services, or Health Initiatives, excuse me. And they really focus on a slightly different market share, the small to medium-sized HMOs. But I would imagine that that's the area where we're going to see more growth as the economy starts to recover.
And Hugh, if you don't mind, I just want to show something here that's a little bit of a teachable moment. It's something that we explored with the local chapter here over the last year or so. You know, and you're basically saying 11% down here for your sales growth estimate.
Yeah.
And that's coming from, it looks like the most recent year. And
yes.
So your 11% is from down there. Well, when you take a look at Manifest, we always go off of this trend line here.
Uh-huh.
So in the case of Manifest, we could be at, let's just pick a number out of the blue, just say 8%.
Right.
Our 8%, because of the gymnastics of this form, our 8% could deliver the same result as your 11%.
That's true.
I don't want to go any deeper into it other than to say that is why you see some of the distortions that get kicked around. And I just ask somebody in the audience to remind me to talk about that in greater detail. Sometimes 8% equals 11%, and it just gives us a headache.
And I'll just throw out, since you raised that, Mark, that be even more careful when you take a look at something we don't even mention at Manifest, that being the blue line on growth, that being earnings per share, because that's an even more volatile where is the starting point. So anyway, I mean, you're correct that it doesn't matter whether it's sales or earnings. If you get into growth rates, you can get confused. But a lot of times people will scratch their heads with earnings growth rates, and we're actually getting to the same final number, which is the one out there on the right-hand side of the graph.
Yeah, and every time I hear you talk about that, we talk about the times when Cy, you, and Ken will end up at the same point, but with different assumptions along the way, and I think you see much of that in SSG-based studies.
Absolutely.
Go ahead, Hugh.
Yeah, and the company has, at least recently, relatively strong both return on equity and gross margin numbers. It's looking pretty nice. I should say, too, that on the grocery side, maybe not so much the prescription side, but the grocery and related item side, as the economy recovers, you would expect to see an increase there, and I'm not too sure to what extent that is embedded in the analyst's forecast of where revenues are. There must be something that's in there, but I have been a little bit more aggressive. One more point, too, if you look at the debt-to-equity ratio here, the last number I calculated was about 0.18, but it's just, you know, it is the lowest in the industry, which is very gratifying, and usually that signals a leader. To me, there's a couple of points that signal a leading company in an industry. You generally see the highest profit margin, the best return on equity, the best debt-to-equity ratio. The PE ratio tends to be a little bit higher than most, but those are usually signals that you're looking at a leader. And if we skip to the next slide, we can see the price-earnings ratio. Of course, it took a bit of a nosedive when the Great Recession hit, but it's now back to where it should be. 10 at the low end and 16 at the high end. And I'm now using a slightly lower projection for the high PE than I did in December. I bumped it down, I think, from 17 to 16. So on the next slide, then, you'll see what things look like. And actually, the upside-downside ratio has improved. It was a 4-point change to 1 before, but now it bounced up to 5.5, and that's even with a slightly lower high PE. My high PE actually is now 15, not 16. It was 16. I've cut it back a little bit, and I think I'm pretty conservative on the estimated low price of 26. But yeah, if Express Scripts, if that issue isn't resolved as nicely as it appears to be, then there is downside here. But things seem to be just fine. I think the next slide shows the MI page from Manifest Investing from yesterday. The one after that shows from December, but we can focus on this one because it just shows, I think, a company that may not be as stellar as the one that we saw for that Ken presented, but for a big guy, it looks pretty good to me. It has a lot of people in Motley Fool following it, but I think its profit margins and sales growth into the future look pretty promising. And I think there's substantially more upside here with Walgreens than there is downside. And those are the numbers I think from December, where I think par was slightly higher, but the price was just a smidgen lower, if I'm not mistaken. Good.
Yeah, and that would suggest that the analysts are becoming a little bit increasingly concerned about the Express Scripts' impact on growth and perhaps even profitability, I would think.
Yeah. Well, I think it's going to last for another 2 years, so I think there will be chances to buy Walgreens on the cheap for the next 2 years or so. And who actually knows what the healthcare changes in the healthcare legislation are going to, how they're going to impact companies like Walgreens.
Well, we're counting on you. You're a part-time lobbyist, right? Not exactly.
No, I like to look at the small guys, and it's not really proper to talk too much about those in forums such as this. Well, you do pick up some very interesting information. If we have time at the end, I'll share what I learned about Vertex.
Oh, excellent.
But I'll leave that there as a teaser. Clinical trials in Vertex.
In that case, I'll cut mine down to 15 seconds. I want to hear that story. All right, thank you. All right, before we jump to Cy, I wanted to just, again, just take a quick snapshot of what the condition of the portfolio today. In pretty good shape with projected return of roughly 14%, relatively high quality. You can see that and the growth is pretty solid also at 11%. So again, something we've told you over the months. We do not emphasize. We don't sit down and say, Cy, you take a small company, I'll take a large company this month. The four of us basically just go where we see the opportunities, pardon the pun, but manifesting themselves. And if you do that, I really think as long as you shop in the broader spectrum, you'll be pretty much okay when it comes to this, and you'll be pretty much okay when it comes to the pie chart that you see here. Now, with the four of us, it's probably fairly easy to see how we would end up with, because we're not afraid to access the opportunities in technology and healthcare, and those are still not overpowering the portfolio. If you think that either one of those positions is overpowering the portfolio, I would urge you to read Cy's cover story from last month, where he talked about that really is not too much historically, especially when the pars that are in that sector support holding those positions. The link to access the Roundtable dashboard at any time is at the top. Here's a look at it from just the top holdings in the tracking portfolio, just for record-keeping purposes. Again, we make this presentation available to everybody in the Manifest Forum after the session. And then, as we always do, this next sort is by par descending. So the more speculative opportunities are up at the top, and most of those belong to me. And I'm learning. Probably went a little bit early on some of those, but I think this year my resolution is going to be to shop more in the middle of this page. Any comments, guys, on any of these?
Just keep that slide in mind for a moment. When we get to mine, we'll bounce back to it, but that's all
Okay.
I'll say right this second.
All right.